What's going on, everybody? Jeff here. Welcome back to the channel. Another highly anticipated CPI report coming out tomorrow. Banks and analysts are currently expecting another big drop, similar to what we had in December. In this video, I want to talk about two things. Not only what happened last month after the CPI came in a little bit cooler, okay, than expected, but also what the Fed members are still saying. Investors are really banking on that not happening. We're going to cover that in this video. Let's get right into it. First off, before we do, slow grind to the upside. If you did not watch the video I made last week talking about just knowing how to execute one simple setup, here is a perfect example of that happening today. The 200 EMA strategy calls or puts off that level. Perfect bounce was awesome today. If you look back at exactly what happened yesterday off that same 200 EMA, beautiful bounce to the upside for a nice move. And then here was another time where it did not work. As you can clearly see, when you are buying the bounce off of this level and it goes against you, you move on from your position, okay? You don't have to win every single trade. You don't have to follow every single person who is taking a trade, but more importantly, know a setup, see how it reacts, learn how to execute and manage it is all you need in order to build a system in this game, okay? So let's get into what happened last month on CPI. As you can see, it came in a little bit cooler than expected. Okay, right here on the 13th, massive move all the way up to 414. I think we closed that day somewhere around, the 401 level, big move all the way down pre-market. And then of course we saw that slow kind of grind all the way down, just continuing to move lower as, listen, the Fed is not going to turn. All right, we watched Jerome Powell speak. All right, after this, and a lot of other events happen, eventually breaking down, moving into this consolidation that we've seen for quite some time. We broke out of this range, got up to about that 394 level, back tested that 386, 387, which was the high of that range, right? The majority high of that range, continuing to move to the upside. So it is worth noting exactly what happened. We did have a massive sell after a big spike when CPI did come out. Not saying it's going to happen again, but like I said, we always want to take a look at what happened previously for the possibilities to what look ahead. But here's what I really want to talk about. Okay, the bull case, okay, really has just been, listen, the Fed's going to pivot. The Fed is going to pivot. The Fed is going to pivot. The Fed is going to pivot. They're going to stop raising interest rates. We're going to get to about 5, which is going to start to fall back down. We're going to move back to, a bull market, and everything will just continue to move to the upside. And these Fed members are really kind of been consistently saying, like, listen, this isn't going to happen. Now, in contrary, let me just give you guys a completely polar opposite side. Fed members also said inflation was transitory. Okay, it wasn't gonna, affect the American public and so forth. All right, maybe inflation was just gonna get a little out of control. They're gonna bring rates back up to 2%. A lot of things they said got immediately thrown out the window, and that is worth noting, 100%. But if you take a look at the Fed Watch tool right now, the market is only currently pricing in, considering we're sitting between 4.25 and 4.5, they're only pricing in a 25 basis point hike at the next meeting, which is, the 31st of January and February 1st. If we do see a 50 basis point, obviously we're going to see a little bit of a pullback because that currently isn't priced in as of right now. But take a look on exactly where, investors are currently, pricing what rates are going to be towards, let's say, the end of the year. Now, this slowly has changed. When you went to look at May earlier, we did see it a little bit lower, and it does look like they're starting to hold, this 5% range a little bit longer. But once you start to get to September, November, and at latest December, we're currently seeing that majority of the market is banking on us getting to that 5% as a high and then actually starting to move down. Okay, this is looking at November. You look at December, it is currently even more. But let me talk about what happened today, all right? And I'll show you. If you look at this, we'll go over to the 3-minute chart, which I love trading off of. You saw this massive move once we broke out that 394, massive move all the way back down to 393. Take a look at what was tweeted from Fast, Stock Market News. Federal Reserve Collins had stated, I think 25 or 50 would be reasonable. He'd lean at this stage to 25, but it's very data dependent, meaning if CPI did not come in, cooler than what they expected, did not even come at in expectations, and it actually came in a little bit higher, you could bank on a 50 probably being head, and therefore this number would already move from 20 to 22, but would move towards somewhere around that 75 to 80% range, especially as we get closer to this date. Now we are a little bit far away from this date, so we do have a little bit of time before we see that drastic drop. But that's exactly what we saw happening inside the market. Couple that with insane open interest on the 392 puts expiring today and 390s expiring tomorrow. Market makers just had a field day, slowly grinding this up on very low volume. But let's take a look at where just some of the Fed members are currently seeing, okay, rates holding out for this entire year. Now, we've heard Jerome Powell speak time and time again. I've already shown you what investors are currently pricing in. That's why you're seeing some of these moves. We're also seeing a lot of your high growth and small caps. Take AMC, for example, up over 20% on the day. You look at Lucid, GameStop, Rivian, a lot of your high growth companies that are valued, okay, based off of future revenue are seeing, a lot of action and a big move as of today. Obviously, when money is cheaper to borrow, considering they're based off of future revenue, it really helps their stocks move higher. All right. And small growth really tends to get a big, rampant move when interest rates are very low. We watched that all throughout 2020 and 2021. Okay. So keep that in mind. However, here's an article talking, from Raphael Bostic saying, listen, he favors holding rates above 5% for a long time. This was just a couple days ago that came out. Atlanta Fed president, says, he's committed to tackling high inflation and his warrants raising rates into a 5 to 5.25% range to squeeze excess demand out of the economy. Now they are specifically looking, okay, to get this demand out of the economy, raise the unemployment, okay, and really, curtail Americans' spending. Okay, that are exactly what they're focused on. Even though they're seeing, okay, CPI potentially come in a little bit lower, if all these other metrics do not match that lower number, they're really going to want to hold the interest rates higher. And that's also so we do not, and I'll make another video on this, so we do not get a 70s and 80s where we have a massive spike in inflation, it comes back down, okay, but then it just spikes up even higher again. And like I said, that's over a longer period of time, over a few years, but they don't want to see that happen again. He asked by the moderator how long he saw rates above 5%. Bostic said 3 words, a long time. Okay, so like I said, while there is definite room to the argument saying, listen, the Federal Reserve has said a lot of things, especially over the past year. We watch this whipsaw of a market. It's really hard to be able to dial in and say, listen, where can we take some credibility from? Where do we have to turn the other cheek? This is something the Fed has been consistent on, considering that they have already made multiple mistakes and we're really late to the game. I don't think that they would want to make another one happen again. So just keep that in mind. I would not be surprised to see, obviously if inflation did come in a little bit cooler. I was saying to everybody inside the group, we had a lot of, support in this area. And I really wanted to see this 390 to 394 get retested. Clearly we did on a larger time frame. Wouldn't be surprised to see a bigger move. Okay, especially if inflation, does come in a little bit cooler, get a bigger move closer around that level before it starts to make, the next leg down. Obviously, this will all change if we continue to make higher highs and the overall structure of the entire market does change. But of course, we'll update you on that. So guys, that's it for this video. I'll see you in the next one.